The stock market had a fantastic year in 2023, largely led by the Magnificent Seven stocks, which included the likes of Nvidia, Microsoft, Apple, Amazon, Meta Platforms, Alphabet, and Tesla. Those seven stocks accounted for the majority of the overall gains during the year for the S&P 500. And here's the results for those seven stocks in 2023. They were led by Nvidia, which was up 239%. Meta Platforms was up 194%. Tesla up 102%. Amazon up 81%. Microsoft came in at 58%. Alphabet also 58%. And the laggard there was Apple, adding 49% on the year. However, although these were the leaders and some of the top companies by market cap within the S&P 500, if we look back just 5 or 10 years earlier, you will see an entirely different group of leaders, or so-called Magnificent Seven. So what is the next group? What is the next Magnificent Seven stocks we're going to see 5 or 10 years from now? That's exactly what we're going to look at in today's video. But before we begin, do me a huge favor. Click that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. Remember, when it comes to investing and being a successful investor, it's not about looking back, it's about looking forward. Past results don't guarantee future performance. So today we're going to be looking ahead 5 or 10 years from now to determine what are some of the largest companies. What is the new Magnificent Seven going to look like? We're going to have a few holdovers and we're going to go through some of those first and then look at some new additions to our new Magnificent Seven. So let's begin with the most obvious holdover, which is Nvidia Corporation. Stock ticker NVDA. Nvidia has seen a rise like no other company in modern history. Looking here, you can see the revenue growth over the years exploding in recent years, which coincides with the stock price, as this is a stock that was trading at $5 10 years ago and around $100 just at the low point in 2022. Today, the stock trades at $880 per share, reaching as high as $974 per share just a few weeks back. And currently, the company sports a market cap of $2.2 trillion. Over the past 5 years, shares of Nvidia are up 1,745%. Every company out there right now is focusing on efficiency and how they can wrap technology or even artificial intelligence into making them more efficient, which will help them grow their bottom lines. And Nvidia builds the world's most powerful chips. They have demand that they can't even keep up with right now. And when you combine that demand with the strong leadership of CEO Jensen Huang, this is a company that has a ton of growth left ahead of it. Now, do I expect 240% annual gains moving forward? No, not at all. So now let's take a closer look at valuation as it stands right now. For 2024, analysts are expecting the company to generate EPS of $23.93 per share. They have a 3-year average EPS growth rate right around 37%. Right now, the company trades at a forward PE multiple of 36.7 times, and they have a very intriguing PEG ratio of just 1.0. This means that the PE that you're paying and the growth that's expected moving forward is showing that this company still has a lot of value in it. And that leads us to stock number 2, which is Amazon.com. Stock ticker AMZN. Obviously, Amazon is a current member of the Magnificent Seven, and I think that's going to continue moving forward, as the company has many different revenue streams that are excelling. Obviously, they're the largest e-commerce retailer. They're the largest cloud provider. What we see in advertising revenues continuing to climb. Oh, and they have subscription revenues along with many more. There's a lot to like about Amazon moving forward, and the company currently stands with a market cap of $1.9 trillion. And over the past 5 years, the stock has returned 101%. Just like we talked about with Nvidia, do we expect those 2023 annual gains? Not necessarily, but not out of the ballpark for Amazon. Let's take a look at valuation as it stands right now. In 2024, analysts are expecting the company to generate EPS of $4.16 per share, and over the next 3 years, they have an average EPS growth rate of 35%. The stock currently trades with a forward PE multiple of 44.4 times, and they have a PEG ratio of 1.27. I like right around that 1.0. I'll go up to 1.25, showing that the PE I'm paying and the growth that's expected to come are showing great value. And that leads us to our third stock and our final holdover in the current Magnificent 7 stocks, which is Alphabet, stock ticker GOOGL. This is a fantastic company, although they have really fumbled their rollout of artificial intelligence. And I think this has some big time promise here when it comes to this company if they can just figure out how to present it correctly. The company currently has a market cap of $1.9 trillion, and over the past 5 years has returned shareholders 151%. This is another company with various different revenue streams. They're already a huge player in the cloud provider space, trailing that of AWS, but they're also obviously a digital marketer, holding the top 2 search engines with Google Search and YouTube. Now, if they can just figure out artificial intelligence, which I think has a lot of promise, those other sectors, those other segments of the business already have huge revenue growth. AI can pack in that much more. In terms of valuation, analysts are looking for the company to generate 2024 EPS of $6.80 per share. And over the next 3 years, they have an EPS growth rate of 16%. The stock currently trades at a forward PE multiple of 22.4 times, which is below the company's 5-year average of 25.7 times. And based on the PE and the average growth rate, they sit with a PEG ratio of 1.4. All right, that's enough with the holdovers. Now we're going to look at 4 new stocks to add to the Magnificent 7, looking 5 to 10 years out. And let's begin with stock number 4, which is Visa Incorporated, stock ticker V. As you know, Visa is a credit card company, financial payment processor, the largest in the world today. And as we have seen, credit card debt levels are sitting at historic record highs. And we have seen the movement with less cash use and more of that little plastic card, more swipes, higher volume, great for the likes of Visa. The company currently trades with a market cap of $557 billion. And over the past 5 years, shareholders have enjoyed a 76% return. Visa has the most cardholders out there when compared closely to its close competitors, which are MasterCard and American Express. All of these companies are going to do well as more volume continues to increase as we use less physical cash and more credit card swipes. In addition, Visa also pays a dividend. Not known huge as a dividend payer, but they do have very strong dividend growth. The company currently has a dividend that yields about 0.75%, but they have a 5-year dividend growth rate of 16%, and they've been increasing their dividend for 15 consecutive years. Now let's take a look at valuation, where analysts are looking for the company to generate 2024 EPS of $9.94 per share. They have a 3-year average EPS growth rate moving forward of about 13.5%, and the company has a forward PE multiple of 27.8 times, well below their 5-year historical average of 31.5 times, and their PEG ratio currently sits at 2.0. And that leads us to stock number 5, which is Berkshire Hathaway, stock ticker BRK.B. Berkshire Hathaway, very well known around the world today, and owned and ran by the great Warren Buffett. I like to think of Berkshire as really another ETF, as it owns an equity portfolio of numerous different public companies. But even outside of that, it has a bunch of private companies or companies that it owns outright, adding to its results. In terms of the equity portfolio, as you know, Apple is its largest holding, accounting for roughly 50% of the entire equity portfolio. Berkshire currently has a market cap of $904 billion, and over the past 5 years has returned 104% back to shareholders. Obviously, Warren Buffett won't be around forever, but something that he and his good buddy, the late Charlie Munger, did was they started thinking about a succession plan many years ago. It's actually already in place, and the new leaders that are coming on have already been pulling many of the strings. Many of the changes that you see today are coming from that new leadership group. As such, it's definitely going to be very interesting to see how its largest equity holding in Apple evolves over time. Is it going to continue to be a 50% weighting, or is that something that's going to slowly decrease over the years? In terms of valuation, analysts are looking for the company to generate EPS of $18.25 per share. They have a 3-year average EPS growth rate moving forward of about 7% per year. giving them a forward PE multiple of 22.9 currently compared to their 5-year average of 23.3 times. So just based on that alone, this company does look fairly valued based on where it sits right now. And now moving on to stock number 6, which is Eli Lilly, stock ticker LLY. Eli Lilly has seen an Nvidia-like move over the past 12 months as the stock has climbed 115% over that time period, which is wild to think about for a healthcare company. The company, along with its competitor Novo Nordisk, were two of the first movers in the anti-obesity drug market, and their stocks have responded strongly compared to the results that users are seeing. I have family members that have used these for both diabetes and weight loss and have seen some crazy good results. Novo Nordisk owning Ozempic, Eli Lilly, Mounjaro. Both of these companies have made huge inroads in an area of need. Just here in the US alone, the number of obese people has skyrocketed in recent decades. And a lot of the diabetes issues we see today, a lot of them are due to obesity. As it stands right now, Eli Lilly currently sits with a market cap of $746 billion, and over the past 5 years, the stock has increased 517%. Eli Lilly will continue to look to expand the use of its current drugs, and this company just looks like one that has a huge growth runway ahead of it. Eli Lilly also happens to pay a dividend, very similar to that of Visa, not known much for their dividend as they only have a yield of 0.7%. However, they have a 5-year dividend growth rate of 15%, and the company has been growing their dividend for 9 consecutive years. So you're getting a combination of dynamite share price appreciation and very strong dividend growth. Now let's take a look at valuation, where analysts are expecting the company to generate 2024 EPS of $12.46 per share, and over the next 3 years, they have an average annual growth rate of 60%. The company currently has a forward PE of 62.9 compared to its 3-year history average of 57.4, and the PEG ratio has the stock still, even with the move higher, looking intriguing, as the PEG sits at 1.04. Again, we're looking right around that 1.0 to show, even though it has a high PE, it's getting great growth, and you're getting great value for what you're paying for. And that leads us to our 7th stock, which is Crowdstrike, stock ticker CRWD. Now, this is going to be the smallest company on our list, so it's going to have a huge growth to catch up in order to be part of a Magnificent 7, a future Magnificent 7. But it's also one of my favorite stocks on this list entirely, even though they don't pay a dividend. The path for growth is pretty clear, as it seems like on a daily basis, we hear about yet another hack at notable companies. We just saw one recently from United Health Group, one of the largest insurance providers in the world today. And Crowdstrike has a ton of growth as it's a clear leader within this space, even though it's going up against big-time competitors like Microsoft and Palo Alto. The company currently sits with a market cap of $76 billion. Again, the smallest company on our list today, but over the past 5 years, the company is up 444%. Again, the competition is fierce going against Microsoft or even Palo Alto, but there's a need, there's huge demand for high quality safety in that whole cybersecurity division. This is that next mover. This is cybersecurity has that AI type growth trajectory moving forward. And I love the fact that it is a founder-led company, very passionate CEO running this company. In terms of valuation, analysts are looking for the company to generate EPS of $3.91 next year, and they have a 3-year average annual growth rate of 30%. The company currently sits with a forward PE multiple of 80.5 times and a PEG ratio of 2.6. So valuation is a little rich at this very moment in order for me to add any new shares to my portfolio. So there we just went through our videos taking a look at the future of the Magnificent 7 stocks. We had 3 holdovers from today's Magnificent 7 in Nvidia, Alphabet, as well as Amazon, but then we had 4 brand new additions. Again, this isn't looking out the next 12 months. This is looking out 5 to 10 years from now. Down in the comments section below, let me know, what would your Magnificent 7? What do you believe the new Magnificent 7 will be 5 to 10 years from now? I would love to hear those down in the comments section below. And if you haven't done so, please smash that like button down below. I really appreciate it, and we'll see you in the next video. Take care.